Are you a GEPF member contemplating resignation, but tormented or worried about the high cost of financial advisor fees? Now, let's face it, when considering resignation, you're thinking about your financial future. You're considering the fruits of your years of hard work. But there's a lingering fear that those high financial advisor fees might eat into your capital, reducing the amount that you have to invest. Now, that's your hard-earned money, your security, potentially dwindling. The thought of this, it can be gut-wrenching. Now imagine this. You've placed your trust in a financial advisor. You've paid for a personalized solution that you thought was tailored to you, only to realize the solution doesn't work for you at all. The advisor didn't fully understand the GEPF, didn't fully understand the resignation process, and most critically, didn't fully understand you. Now you're stuck in a financial situation that does not meet your expectations or needs. You've paid for a service, but yet you've been left high and dry. How disheartening is that? So yes, financial advisor fees are a reality. They will need to be paid. But the million-dollar question is, how do you ensure that you're not paying more than you should? And beyond that, how do you make certain that you're receiving the full value for what you're paying for? Now, understanding these fees and the impact they have on your financial future is vital. It's the first step towards ensuring that you're not just paying, but you're gaining something worthwhile in return. In today's video, I'm pulling back the curtains on the high cost or real cost of financial advisor fees and commissions. And crucially, I'm going to reveal to you the secret to ensuring that you can receive more value than what you're paying for. So stick with me as we navigate through the potential choppy waters together. After all, your future, your financial independence, and your peace of mind is worth fighting for. Let's get started. So as I said to you, financial advisor fees are there. It's a reality. Just what you want to aim at looking for is how do you ensure that you're getting a lot more value behind it, right? Now, as promised, I'm doing this video because I've had tons of requests around financial advisor commissions and how do they work, how is it calculated? So you're going to get the full knowledge now, right? Let's first understand the process, the flow of money, so that you know exactly how money is going to be moving, right? Remember, you would have your funds sitting in here with GEPF. I'm going to use an example. Let's say 3 million because I want to make the math look easy. So I'm using a round figure. Naturally, when I connect with you on a one-on-one basis or when you're doing the calculations on your own, you can use the percentages that I'm showing you, and as long as you have an understanding of the concept. Now, I'm assuming that you're watching this video because you know you're not going to take it out in cash, right? Because that's going to obviously take a lot away from you in tax. So you want to have this money moved across to an approved fund here. And we're going to get into the cost structure, but I just want you to understand the pattern or the flow of money. From there, notice that there's a pool of money that you're going to take out, and this is the 1/3 portion that's coming out of your investment, pardon me. And then we also have to talk about what's happening on the 2/3 portion. So that's this pool that's sitting here, and this is the 2/3. Now, we're going to start to analyze where the actual fees come in. I'm going to break up the money, right? The flow of money and how it's taking place. So from here, your entire 3 million is moving across onto this side, which means sitting in this pool here becomes 3 million. And then you're entitled to take 1/3 in cash, which is easy. This is why I'm using 3 million. 1/3 is 1 million. And it means you're going to invest 2 million. And that 2 million is invested. Obviously, you want to earn some type of income from it. So notice there are two products that are going to be used here from the insurance company. The first is when you are moving to the approved fund. So you're transferring from GEPF into the approved fund. That's the first product. The second is not on this side because this money is getting paid into your bank account, isn't it? And this is the reason when, as I said to you in previous videos, when money is paid into your bank account, it's going to be taxed. When money is moved to the insurance company, this is where you can save the tax. So there's no tax here and there's no tax here. So that's the benefit, right? You're able to save on tax there, whereas when it's paid into your bank account, it's going to be taxed. However, let me ask you, the insurance company is not going to do this for free. You agree? Which means you're going to have to pay a cost. And therefore, we're going to start to have a look at the cost here, and we're going to have a look at the cost here. Now, the cost is no different to what you're paying currently. So if you have a retirement annuity or you have some type of investment, I'm giving you the percentage so that you can see it. The percentage is 3.45. Now, of this, the 0.45 is the VAT component, and the 3% is actually the financial advisor fee. So 3% is going to be the advisor fee. Let's take, in this case, if I'm the advisor, so 3% is the fee that I'm earning, and the 0.45 is the VAT element. Now, I know there's this gray area in terms of commissions, but I actually want to tell you, you can make commissions work for you. It's actually very good that you have commission and not a set fee, because the higher the commission, the more value you should be getting. Right? I'll say it again. The higher you're going to pay in commission, the more value you're going to be getting. You also want to have this commission discussion or this fee discussion right up front, because you want to check to see exactly how much you are paying, and you want to see, hey, what are you getting in return for that? Now, I'll go into more details, and I'm going to talk to you about what my mentor calls a doofus test. So I'll chat to you a bit later on in this video on how to structure that. But going back in here, when we start to look at different amounts, so let's say you have 1,000 Rand, the 3.45% of 1,000 Rand is going to be 34 Rand 50. See, it's not a large amount, you agree? But because this is a percentage, because it's calculated as a percentage, the Rand amount that you invest will be different. You see, it determines how much is getting paid. So let's head over to the calculator. Remember, on this end, you're transferring the entire 3 million. So now I'm going to do a calculation. You should see my calculator popping up. I'm taking 3 million Rand and I'm working 3.45%. It's the same percentage, but it's a higher amount. As you can see here, 103,500. It's a higher amount because you're moving a lot of money, right? You're moving 3 million Rand across. So I'm making a note here, 103,500. Heading back to the iPad. So 103,500. So when you are transferring money over from GEPF into the approved fund, now you know that full fee, okay? And I'm also including the VAT because you want to know the total cost, right? Even though the VAT might not go to the financial advisor, but the insurance company itself, it doesn't matter the company, they're VAT registered, which means they're going to charge VAT. The VAT will eventually flow to SARS, but you want to see the total amount that's coming out to you, right? So notice this is where the 103,500 comes in. Then, as I said to you already, the 1/3 that's coming out, there's no tax, pardon me, you're going to pay tax on that because it's coming to your bank account. And because it's coming in your bank account, the insurance company can't charge you a fee, which means no financial advisor fees or commissions. When we are working with the 2/3 component, this is going back into an investment. And because it's going into an investment, and as I mentioned in previous videos, there are 5 different ways that you can invest money here. So you want to analyze the 5 different options, but once you put money in there, now you've got the second set of fee, right? Notice no tax here. And because there's no tax, we're using an insurance company. And again, the insurance company is not going to do it for free, which means it's going to be a cost. However, usually the cost is 3.45%. Remember, as I just shared with you now, in this instance, government forces insurance companies to halve the cost, right? And the thinking behind this is simple. Government's trying to ensure as many people as possible are not dependent on the social grant because it's becoming a huge strain. So one of the ways in which they're doing this is they're saying to insurance companies, listen, you have to reduce your fee by half. So these fees here are going to be divided by 2. So I'm going to first calculate the 3.45% for you, and I'm going to do that on 2 million, right? So you can follow along on my calculator here. So 2 million Rand times 3.45%, which means you should be paying 69,000, right, for that transfer, but it's going to be divided by 2. So half of that, 34,500. So heading back onto this end, now we've got the second fee, 34,500, which means in order to calculate the total fee that you are paying here to the advisor, I'm adding both amounts up, right? I'm adding 103,500 plus 34,500. I'll do this on the calculator for you so you can see, follow along with me. 34,500 plus 103,500. Now this is 138,000 that you're paying as a fee. Notice it's including VAT, right? Does seem like a high amount, isn't it? Which means, and here's the secret, you want to make sure that you're getting more than this in value. See, you want to make sure that you're getting more than this in value. So let's start to have a look at this. It's 138,000. And I'm going to put the fee here, 138,000. So when I start to talk to you in terms of value, what you're looking at from the financial advisor is what are they giving in return? So if you're going to be paying 138,000, what are they bringing back for you in return? And this is where you can start to really exploit or start to use the maximum benefit from your advisor, right? Now, when you're transferring to the approved fund, you need to make sure it's the right approved fund. And this is again where the advisor can bring in value by helping you to understand different approved funds and then showing you which one is the most appropriate for you. Then you've got a string of tax implications that happen here. I've already shared with you the secret that there's no tax. And then when money is coming in here, you know there's a tax consequence. If you were working before March 1998, you know there's the pre-98 tax benefit. When you are earning an income here, you know there's also a tax benefit on that. So there's multiple areas in which tax planning needs to be done. Now let's just assume that the tax planning gets done and you're able to save 200,000 in tax, right? So let's say you had come to me and I'm able to put you in a position where I'm showing you how to save 200,000 in tax. See? Saving, and this is tax, 200,000. So notice what's happening, leaving out all the other elements. You're paying for a service 138,000, and in return, you're getting back a saving of 200,000 in tax. Now, if you follow the tax guide, tax has to be paid, right? However, if the financial advisor or a specialist understands the tax rules, understand how it works, they can show you how to legally avoid the tax, right? Which means you're looking at ways to save on tax. And this is where I feel the financial advisor can bring in value. This is how I do it. Now, obviously, you're going to choose your financial advisor, right? But if it's me, I'm focusing on paying on how do we reduce the tax because it's a given, we have to pay it. Then in addition to that, you want to start to look at other elements. How can the advisor grow capital? See, how can they grow your capital? So let's just assume the capital starts to grow, it's invested, there's a structure, and in the first year, the capital grows, I'm just using a figure, 100,000. See, the capital has grown by 100,000. So notice what's happened here. In terms of value, and I've only used 2 so far, right? But there's tons of ways that I'm helping members to get value. Where just I can tell you on my end, the goal should be to double this, maybe 5 times or 10 times. So if you are getting back more in value, then it makes sense to pay the fee, you see? So notice in this basic example, 300,000 is what's coming back to you based on the advice that I've given to you. So in that instance, now you're paying for a fee, or you're paying 138,000. So you're giving me 138. We have to minus the VAT. And then I'm showing you how to create the tax saving, and I'm showing you how to grow your capital. So when I do that, I'm offering you 300,000. I'm now putting you in a better position. Can you see? Now, what you want to try and avoid is you want to try and avoid a situation where sometimes a financial advisor is not sure on how to do tax saving, or unsure on how to grow capital, or not sure how to assist with medical aid, or how to do holistic financial planning. In that instance, I've noticed a tendency for financial advisors to want to reduce fees. And this is where you want to start to analyze this individual. Again, remember, you're going to make the call in terms of who's the financial advisor, right? Because you choose that financial advisor. So I want you to understand this. If a financial advisor is working, well, most of us, we work on commission only, and some of us are charging professional fees. But if a financial advisor is charging you a commission, that's how they earn their fee, and they start to reduce this amount, now you want to start to analyze exactly how much of work is getting put into your system, into your structure, right, into your planning. Because if that planning doesn't get done properly, and all that's happening is a reduction of fee, then you agree with me, you could end up paying a lot more in tax. See, you could end up having an investment where money is decreasing. Now notice what's happening here. You've got 3 million Rand capital. So as I used in my example before of 1,000 Rand investment. So let's take this. You know, the markets ebb and flow. So we sort of have this situation happening with the markets. You have that take that's taking place. Now, when you have a small investment, let's take an investment of 100,000. And if it's invested poorly and there's a market loss of 10%, you lose 10,000 in that instance. See, that's a significant amount of money. And imagine how you'd feel losing that. And that can happen in a day, it can happen a week, a month. Now you're moving a large chunk of money. So if you're moving across 3 million, that's an even bigger amount of money. If you don't get the right advice or the right guidance, and now you lose 10%, suddenly you lost 300,000. And how would you feel then? You see, now none of this has happened if you're watching the video and you haven't yet resigned, right? Meaning this is all the planning that must happen in advance to put you in a position where you are starting to grow capital or protect your money from the markets. Because I'm guessing the aim that you're wanting to move away from GEPF is you don't want GEPF to handle your funds. You want to be in control of it. At the same time, you might not know about tax planning, you might not know about investing or medical aid or how to structure this, in which case you now need a specialist to help you. And therefore, when you are paying the fee, I'm saying to you, you have to be mindful because no one's going to do this for free, right? And if they are, you have to ask yourself, what's the catch? If someone's going to be reducing the fees, what's not getting done for you? Because take yourself, imagine you work, if you're structuring this process well, right? Let's say you are running 12 months ahead. So this is where you are now, and you have 12 months in which to plan, right? And the financial advisor is saying to you, hey, they're going to reduce the fees. Now, over that 12-month period, imagine you worked for 12 months and you're earning a low income. See, how do you sustain yourself? How do you sustain your family? So the same on this end. If you're starting to have a look at financial advisor fees, and this is a trap because everyone wants to pay, don't want to pay more than what they should, right? So often advisors know this and you want to be guarded. If a financial advisor is reducing it, you want to make sure that you're still getting the value. They're still doing the tax spending, you're still getting the growth, all the different elements are put in place. And if that's the case and proper financial planning is done, it's going to be very difficult to reduce fees, mainly because a lot of work must be put in, right? However, if that initial work gets done properly, then the value behind it might be significant, meaning you could get 500,000 back in tax savings or in terms of growth or just in terms of saving time. And then it becomes worthwhile. Would you agree? You're paying for a service, 138. VAT is going away, which means the fee might be a little lower, closer to 100, and you're getting back 500. Then it makes sense. So in terms of the doofus test that I was sharing with you, this is how my mentor has structured it. Now, he runs this when he is doing this for employing staff. But here's what you want to do. You see, 3 million Rand is quite a significant sum of money to invest. And if the financial advisor or specialist that you're using is not capable of managing money, you don't want to invest 3 million and find out that you lost money. As I showed you in this example, you can lose a significant sum of money. And this is what's happened to members in the past. So when you're running the doofus test, you want to run the test with 100,000. So let's say you're doing the doofus test with me, for example. You would start off running the test with 100,000. And you're basically checking with me to see how good am I in terms of investing? How good am I in terms of running tax? How good am I in terms of explaining the concepts to you? Now, notice if you're looking at a fee perspective, 100,000 Rand investment, when you work out the 3.45%, it works out to 3,400, right? Because it's a smaller amount. So you're paying 3,450 Rand and you're running the test. It's not a high amount, you see? Now, in that instance, let's say I'm able to show you some value. I'm showing you some tax saving and I'm showing you how to grow capital on 100,000. Then it means I can show you how to do that on 300,000. But if you're running the test with a financial advisor on 100,000 and they're not able to deliver the value for you, then you want to start to look at who's the next advisor that you can run this test with, right? And remember, the power is all in your hands. So in terms of choosing the financial advisor, you choose the advisor. And exactly what I shared with you here, and if you followed all my videos, even after you invest the 2/3, depending on the option that you choose, you can still change the insurance company. You can still change the place that you're investing money, the fund. You can still change the financial advisor, meaning you always have the control. The critical element behind this is you want to get this stuff done in advance before you invest money, before you lose any money to tax. You want that planning done properly and structured well, because often in cases when money is lost, it's very difficult to recover it. So now you know the full extent in terms of how financial advisor fees or commissions are worked. And more importantly, I've spoken to you about delivering value, right? It's okay to pay the fee, provided you can check to see what are you getting in return. So make certain that you have the fee discussion up front in advance. And I want to hear from you because I know this was a video that's been asked for quite often. Post comments below. Are you happy with the transparency that you've seen in this video? Are you happy with the information that you've got from this video? What other elements do you need support on or guide on? Post your comments below, let me know so that I can create new videos for you to help support you. If you've not already done so, remember to subscribe so that you get access to the videos as soon as I produce them. And again, help me out here. Show me that I'm doing the right things for you by giving me a thumbs up on the video so I know I'm helping you. And this information is critically important. You know, my goal is to help as many GEPF members as possible. YouTube videos are completely free, so I encourage you, share the video amongst your colleagues and friends, or make a commitment to me, share it with at least one person, help change the life of another today. Good, I shall see you in the next video.